We're going to go ahead and start recording. My name is Adrian Ramirez. I'm the Associate Director of the Career Development Center, and I'm also overseeing the Money Management Center at Fresno State. And today we have a very interesting topic that we all have to make sure that we understand and that we prepare our taxes every year around this time. And so we have a local accounting firm, Moore and Company, LLP, coming to speak with us today to give students tips on how to prepare their taxes and what to look out for and things to know, and just best practices, things to be aware of. So I want to thank Jenna Cade and Shayna Miracle for being here today and providing the information to our students. Thank you so much for attending today.
Thank you, Adrian. All right, so I'm Jenna and this is Shayna. This is Jenna Cade, TBC, so to be continued. I'm currently studying for my CPA, so I'm not quite there yet. And then we'll just do some quick intros and then go ahead and get into the slides. And hopefully you guys will learn more than just, okay, do this, do that, but also have a basic understanding of taxes so you can take with you for future years as well. And if you've already taken Tax 145, that's great, but I promise you will probably learn something new as well. So kind of just hold on out till the end. All right, so just a quick intro. And if you guys do have any questions, you can contact me at my email or even go to LinkedIn and just message me through there. Any questions at all? So I was on the board. I graduated from Fresno State last semester in December 2020 with my degree in accounting, and I was on Beta Alpha Psi. So that middle picture is just me on the board of Beta Alpha Psi. Bottom right, I studied abroad in Spain, so a great group of people there, took Management 110. Hopefully, I don't know how studying abroad looks now, but hopefully eventually I'll go back to normal. I like food, so I didn't make those tacos. I did make the chicken in the upper right-hand corner. It looks good on the outside, but it was well undercooked on the inside, but I thought it looked pretty. Coffees like cold brew, and then traveling. So I just have some pictures of Oregon, Northern California, Yosemite, and then also in light of COVID, going on hikes and walks is, a lot more easier or safer than other things to do. So even if you guys go out I recommend going out to Pine Flat, 20 minutes from Fresno State. There's a lot of great areas around there in the bottom right-hand corner. That picture is from over there. Right. My name is Shayna Miracle. You have my email and my LinkedIn up there. I've been a CPA for about 2 years now, and I've been here for about a year and a half. I graduated Fresno State in December 2013, and I was also on the board of Beta Alpha Psi, so I got to go to the conferences and kind of travel around. It's what I enjoy doing. And okay. Okay, so where can you file? There are several different places. There's TurboTax, H&R Block, the IRS Free File Program, and VITA. You can go to irs.gov to find a location near you, and also CPA form like Moore and Company. And the first 4 are free. The first 3, TurboTax, H&R Block, and the IRS Free File Program, are based on income. So if you meet the income requirements, you can file for free on those websites. And VITA is free for everybody. And the CPA firm would, of course, charge you for it. But once your returns get more complex and you guys become big and successful, you can go ahead and use a CPA firm like Moore and Company. Yeah, so if you have just like a couple W-2s, it's really easy to file on your own. So you can just go to TurboTax or even VITA. I think there's about 4 locations, 4 or 5 around in Fresno. So just go to irs.gov and then you can find the location if you need any extra help. There are several different filing statuses that you use when filing your tax return. The first one that will probably apply to most of you is single. and you have to be unmarried at year end in order to file for that. There's head of household, you have to be unmarried at year end, you have to pay more than half of the cost of keeping up a home, and you have to have a dependent. And there's married filing jointly if you're married at year end. And also just keep in mind, so a lot of this stuff is going to be relevant to you and a lot of it is not. We're going to try and focus it on, students who are in college. So we'll just kind of skim over some things, but I'll be sure to point out, what you need to really note down or take into consideration that'll apply to you. So like with filing status, okay, if you guys are in a relationship that today, that last year, that's great, but your filing status is going to be single. It's not going to be in a relationship. So keep that in mind. And we just want to try to cater it to, the students that are watching this. So I assume it's a lot of people like me. So I was claimed as a dependent prior year, and I just graduated not too long ago. So, I'm still in between that 19, 24, no longer in school full time, but I was for 2020. So hopefully it's not too overwhelming, but you get a basic understanding of what you need to know when you're filing. There's the standard deduction and the itemized deduction for 2020. It's based on your filing status and the amount of income that you make. So if you're single, your standard deduction would be this amount. Same thing for married filing joint and head of household. And this is the automatic thing that you get based on your filing status. There's also the itemized deduction, and this includes medical expenses in an amount that exceeds 7.5% of your AGI, which will tell you a little bit about what that means later on. There's state and local income taxes limited to $10,000, property taxes, D&B fees, mortgage interest, investment interest, charitable contributions. And something that's new for 2020 is even if you don't itemize, if you just use a standard deduction, you can still get a charitable contribution of $300 if you paid cash to a charity in the amount of $300 in 2020. And there's casualty losses if you're impacted by the creek fire, gambling losses, which are limited to gambling winnings. So if you had $20,000 in gambling losses, but you only won $5, it would be limited to the winnings. And not to overwhelm you guys, a lot of this you don't really need right here. So you guys are likely going to be taking the standard deduction because it's hard to itemize any more than $12,400. If you don't own a house and you're not paying property taxes, then you're likely not going to itemize. So all of this medical and casualty losses, you're like, what the heck is that? Don't stress about it. Don't worry about it because you will likely be taking the standard deduction, and that's all you really need to know right now. Yeah, if you do own a house and you're paying mortgage interest on it, then yeah, that'll apply to you. But for those of you that aren't, don't even worry about it. Just know you're likely going to be taking the standard deduction, and then we'll move on from there. So who is required to file? Based on your filing status, your age, and the amount of gross income that you have, these are the limits for people that are going to be required to file. So if you're single, under 65, if you make at least $12,400, you're required to file a tax return for 2020. But even if you are under these income levels, say you make only $10,000 from a W-2, you get taxes withheld on that check, so it may still benefit you from filing your own tax return and claiming yourself. So if you get income from a W-2, you file your own return, there's a potential to get back some of those taxes that you got withheld from your check as a tax refund. So it's kind of just something to think about. And then also students may be able to deduct certain college expenses that you paid and claim education credits, such as the American Opportunity Tax Credit. We'll get into that a bit later. And then, are you a dependent? You could be claimed as a dependent if you're between the ages of 19 and 24. If you're under 19 and not a full-time student, you can be claimed as a dependent. If you're 19 to 24 and a full-time student, you can also be claimed as a dependent. But the taxpayer must pay more than 50% of your support, and you must live with them in most cases. And then for your parents or guardian claiming you on their tax return, they receive a $500 credit for that. And you're probably wondering, like, why are they talking about this right now? Why do I need to know this? Well, there's a new thing in 2020 that will be really helpful if you understand the dependency status. So your parents, for example, or your guardian can claim you as a dependent 1 year and claim you not the other, and then claim you the next year after. So we'll get into it right after. But we're assuming that majority of you guys are between 1924 and a full-time student. And if you are, say, living at home, for example, or your parents are supporting you more than 50%, then likely you can be claimed as a dependent. But there is a different credit we'll go over in the next slide that can be applied in 2020, and it may be beneficial for you to claim yourself this year. So we'll go ahead and look into that. Okay, the stimulus payments. If you don't remember what you received in the year, you can go to this website, iris.gov, go to Get My Coronavirus Tax Relief and Get My Payment. And this can help you calculate the payment that you should have received if you don't remember. This payment is not taxable. You just need to have the information on your return because of this recovery rebate credit. So if you didn't get the full payments, the $1,200 or the $600, then you may qualify for this credit on your 2020 tax return, assuming that you're under the limits. So you file your tax return in 2020, claim yourself. You can, if you didn't receive the $1,200 and $600, you can get the $1,800 back as a tax credit on your 2020 tax return. So this is very helpful. Yeah, it is very helpful, and it seems like, okay, what's going on right here? But this is what I am going to do. So my parents, in 2019, my parents claimed me, and I didn't get the stimulus payments for 2020. So for 2020 tax year, when I file, I'm going to claim myself, and if I claim myself, then I can get those stimulus payments that I did not receive in 2019. And yes, you can do that. But you have to make sure that your parents do not file, or when they do file, they don't claim you as a dependent. Otherwise, you won't be able to claim yourself on your own tax return. So just say, hey, parents, wait, or your guardian, or whoever claims you, say, wait before you file and see who gets the greatest benefit. So I would just compare, mess around. I don't know if you are how inclined you are to mess around with the numbers, but you can see how much you get back, and then see how much your parents get back. And worst case scenario, you file and you can just give them $500 credit that they get for you, and then just move on from there. And we got a question about having a newborn in 2020. If a child is born during the year, then you would be able to claim them on your taxes. They would be your dependent for 2020, even if they're born on December 31st of 2020. So that's nice. Okay, and then you also get a $2,000 credit for child tax. Yeah, that child tax credit for a child under 13. So what you'll need, so just a little rundown. If you are going to bite it, it is helpful to have last year's return because it'll help the preparer a lot. If you have just your social security, your address, and everything ready to go. And then some programs will ask for your prior year AGI. So just to have that on hand will be helpful. And then social security numbers. So for yourself, if you don't already have it memorized, it's probably about time. And then social security numbers for all your dependents as well. And then bank account information. Direct deposit is a lot faster. So if you want your money faster, do direct deposit. If you don't want to owe any money, then don't put your bank account information in, and then you'll have to mail it in. And then address. Okay. All right, and then so income. W-2, so I'm sure a lot of you guys seen a W-2 before. We'll just quickly go ahead and look at the W-2 screen. Okay, so what's really most important here is the federal income tax withheld, and then your state income tax withheld. And also in box 14, I circled it in red there. Sometimes or majority of the time, you'll see your California SDI withholdings in there. So you need to make sure you input that. I've seen a couple on a couple W-2s where it's not in box 14 and it's in the local income tax locality name, so box 19 and 20. So just kind of be aware of that. We're gonna look at chat real fast. Does last year's return mean how much you made? Oh, last year's return.
That would just be the tax return that you filed for the prior year, so 2019. So it would just be, I think sometimes for security purposes, they'll ask for your prior year AGI, but you'll need 2020 tax return documents in order to file your 2020 tax returns. And then what if you don't have a social security number? There is a spot that says applied for, so you can use that, but a lot of times if you use that option, it doesn't allow you to e-file. So you kind of just have to see what they'll let you do with that. And then if one of your previous jobs never sent your W-2, would I be able to do my taxes? Do I just not report that income? No, you definitely still want to report that income, because even if you didn't get the W-2, the IRS does. So they would be able to see that. And there's also a website, irs.gov. You can go and sign up for an account, and then you can see what income that has been reported to the IRS.
I'll answer that. So if your parents, do you use your parents' tax return if you were a dependent the previous year? So if you're a dependent and they claimed you, you can still file your own tax return. So that's what I do. So because I have my own income as well that I have to report. And that's not reported on your parents' tax return, that's reported on your own, despite them claiming you. So if you didn't work at all, then you likely probably didn't file because you're under that standard deduction and you didn't have to. If you did work, then you should have filed on your own, despite, even if they did claim you. So it's just a matter of whether you worked or not. Okay, so if you have any other questions, feel free to send them in. So a 1099 miscellaneous form, I don't know if any of you guys were Uber or Lyft drivers or DoorDash. I know that may have been more popular in 2020. But if you are an independent contractor, so this isn't your normal W-2 employee. So you're not receiving a W-2, you're receiving a 1099 miscellaneous. And you have to file a Schedule C with that, and we will kind of quickly go over exactly what that entails, because it may seem complicated, but it's pretty basic if you just have an understanding of what to do. And then a 1099-G, I'm sure there'll be more of this. So unemployment compensation, believe it or not, yes, it is taxable. So we'll kind of look at the form real fast, just so you know. Can you? Yes. Okay, so all the forms aren't going to be the same, so they're not all going to look like this. But you do have the basics with the boxes and the numbers. So one, unemployment compensation, that will be taxable. And I do encourage that if you guys aren't already withholding federal taxes from unemployment, you likely should. So box 4 is your federal income tax withheld from there.
And the unemployment income is only taxable for federal, it's not taxable for California.
Okay, so 1099R. So is anyone already have the retirement plan set up? I'm kind of looking into it. I think you guys all should. You don't have to have your career planned out. You don't have to have a full-time job to start saving up for retirement. So it's never too early. But if you do receive a 1099-R and you're getting distributions, let us know. You can even send in a chat, and then we'll specifically address that. But likely, I don't think any of you guys will be. And then this might be new. So 1099 DIV or B statement. So especially with the stock market in 2020, you may have sold or bought securities or received some dividends, and that could be through Robinhood or Fidelity. Now, one way to access this statement, because mine was not emailed to me, I actually had to access it. So I went into just my account, and then if you go to tax forms or tax statements, you can find it. And then we'll look at So also for 2021, if you guys, realized your gain on that GameStop stock, then you're going to be getting one of these forms. So it'd be good to take note for 2021 when you file. So we'll go ahead and look at the 1099 fee form. And it's really simple, so don't be overwhelmed at all. You just want to make sure, you have your date acquired and date sold. So it's whether short-term or long-term, because those are taxed differently. And then you have your proceeds, which is, what you sold, sales price, and then your cost basis. And then there is a wash sale that may come up if you bought or sold the stock with, the same stock within 30 days, but not always. So just kind of be aware. It's really easy to do on your own, so don't think you have to go and pay someone to do these ones, because I really encourage you guys to take advantage of, learning this material on your own so you can file yourself.
And then also it's important to put those dates in, because it would tell you if it's short-term or long-term, and there's different tax rates based on short or long-term capital gains and losses. So we're going to go ahead and answer some of the questions now. Okay. I worked but never had any state or federal taxes taken out when I self-did my taxes. At my work, they told me I wasn't getting taxes taken out because I don't make a lot of money. Well, that's where the standard deduction comes in. If you're single, if you made $12,400 or more, you would be required to file a tax return. So it just depends on how much money you make, even if no taxes were taken out.
Yeah, so if you made less than $12,400, you don't need to file.
And if I made less than $2,000 a year, that would be the same thing. Is you would be under the 12,400, so you wouldn't have to file a tax return. But if you had any withholding taken out, you might want to file a tax return because you can get that back as a tax refund. Do you report FAFSA on taxes?
No.
No, scholarships and grants are not taxable income, so you don't have to report that.
But you can, you're filing your taxes is helpful. That information is helpful to use when you are filing for FAFSA, though.
I have a Roth IRA, and just to make sure I don't have to report anything, right, or any special forms. The only reason you'd have to report it as anything is if you took a distribution from that Roth IRA and you got a 1099-R. So if you're just putting money into the retirement plan, you don't have to report anything on your taxes in that year. It would just be when you take a distribution from the plan. If you got a car in 2020, can you put it down on your taxes? If so, how would you go about that? No, you can't unless you use it for business. So if you used it for Uber, Lyft, DoorDash, you can do the mileage on the car, but other than that, you can't write it off. What is considered a college deduction? Books, fees, tuition, supplies, that's all college deductions.
And not room and board.
Not room and board.
Okay, we'll take a little pause on the questions, and then you guys can send them in, and then we'll address them at one point. Okay, so Schedule C. So if anybody was like an Uber or a Lyft driver, feel free to say something in the chat, because I'd just be curious. But this will be extremely helpful for you because it can seem complicated. So directly from like Lyft, for example, you will get a statement with your income. And then on that statement, it may have fees or commissions that you can directly take on your Schedule C. So your expenses are like anything you bought for the riders or parking fees, and then those fees and commissions that aren't already deducted from your wages, but they're on the statement. So I've seen it before where Lyft does give you like a statement of, how much you made, and then there's fees and commissions. Those fees and commissions you can't deduct, and they can be quite a bit. So it's just important to keep that in mind. And then, so standard mileage versus actual mileage. If you guys are considering doing this in the future, like you're thinking about doing Uber or Lyft, I highly recommend tracking your own mileage. Because with Uber, for example, they only track your mileage when you have a passenger in the car. So if you drop off someone and then you're waiting around to find another rider, they don't track those miles. So it's good to either keep a log yourself, or there's even apps where you can track your own mileage. That way you can, get your greatest maximum deduction. So there is standard mileage versus actual. Standard is the easy one. So I would recommend that one unless you have a lot of repairs in 2020 for your car, then the actual might be more beneficial to you. But the standard is you just take your business mileage and you multiply that by it. The program will do it for you, so you don't worry about, pulling out your calculator and trying to figure this out. But you just want to differentiate between, okay, am I going to use the standard or the actual? Likely you'll use the standard, and it's really easy because with the actual, say you have a car wash for $10, you can't completely write off that entire car wash. It would be your business use. So if you're using it for Uber, it's like how much of the time are you driving your car? And that would just be your business mileage over your total mileage. And then, so a Schedule C, this also goes with like a side business. So in 2020, whatever side businesses you guys started, making face masks, whatever hobby you picked up and you made some money off of it, well, you have a Schedule C to file. Congratulations. And then you can write off those materials and supplies. Unfortunately, since you are not a W-2 employee, you don't have an employer to withhold any taxes for you, so you are going to have to pay an additional self-employment tax. So that's one of the downfalls of being an independent contractor, is you do have to pay additional taxes here. Well, not additional, your own taxes, because you don't have any withheld throughout the year. And then Prop 22, this is just a quick little thing, because for Uber and Lyft drivers, these gig companies, originally Newsom had passed this bill saying that they were going to be W-2 employees, but just so you know, now Prop 22 was voted on in November, so that is no longer the case. It's going to be retroactive. So Uber and Lyft drivers, you guys are still independent contractors as opposed to W-2 employees. So I don't know if some people were maybe concerned about that, like if they filed 1 year, is that going to change this year? Well, nothing's going to change. It will likely just stay the same. And then so deductions, we'll look at the 1098-T form. Yeah, so you guys can go to My Fresno State, and then you'll go to My Finances, and then it'll have the 1098-T form you could easily access. So you'll just have in box 1, whatever was paid to Fresno State for your tuition, and then box 5 is your scholarships or grants. And you're gonna net those two together, because what you can deduct on your return is what you paid for, and your scholarships and grants were not paid for, or did not pay for the tuition. And then also there's an adjustments. I had this on my 1098-T, which is new, and I haven't seen it before. It was in the box 4, so adjustments made for a prior year. I'm not sure if that has to do with some like COVID refunds, or I think it may have, I don't know if anyone else has this. You guys can go ahead and send it in the chat if you had, but it may be for books, so immediate access. I don't remember paying for that, so I think that's what the adjustment is for. And you don't even worry about that box. Don't worry about like netting it with box 1. Just make sure you net box 1 and 5 together. And we'll go ahead and look at the chat box real quick.
How much do you make to file taxes? Once again, it would be over the standard deduction. So if you're single, 12,400 or more, you would be required to file taxes. Can you use a sibling as a dependent? You can, depending on the circumstances. They have to not make it $4,300. They can make less than $4,300. They have to live with you for half the year, and you have to provide 50% of their support. So it's possible.
Yeah, I would recommend even sending one of us like an email about that, because you could even file possibly head of household too with that, but we would have to know a lot more about your situation. Okay, so we'll go back to the previous slide, and then healthcare. So to avoid, this is new for 2020, federal, there is no penalty for not helping healthcare, but in California, there is a penalty. I think for singles, it's like around $600. So you can likely be on your parents' insurance until 25. I'm taking advantage of that. If you have your own healthcare, just make sure that you check it. So if you're paying Medicare, make sure you check it for 2020 so you avoid that penalty. And then something new that can be really helpful if you donated to charity in 2020, those activist movements that were going on, and you donated to them, just make sure they're qualified. Section 1C 501c3 charities before you deduct it. But if it's up to or under $300, you can directly deduct that on your return if you don't itemize. So like we said, the standard versus the itemized deduction standard is $12,400. I definitely cannot hit that even with a bunch of medical expenses. I can't even barely reach that. So it's good to take advantage of this one. Just, a couple $100 here and there. All right.
Okay, the earned income tax credit. Most of you that got a W-2, you get some kind of notification that you may qualify for the earned income tax credit. This is based on how much income you make throughout the year. So even if you don't have a qualifying child, if you don't have a dependent, you can still take this credit as long as you make under $15,820. And the income limit goes up based on how many qualifying children you have. And there's specific requirements you have to meet. You have to have a social security number. You can't be married, financed separately. You have to be a U.S. citizen or resident alien. You can't have foreign earned income or investment income greater than $3,650. And you also must have earned income. So if you only have dividends and interest, that doesn't qualify. If you have a W-2 or income from a business, that would qualify. And you have to be at least 25, but under 65. You can't be somebody's dependent or a qualifying child of another person. And you must have lived in the United States more than half of the year. And this credit is great because it's a refundable credit, which means that you can use it to increase your tax refund.
Yeah, we'll go ahead and answer some questions. Let me turn the camera on.
Do you have to pay back the stimulus check in next year's taxes? You do not. The stimulus check is not taxable, but you would want to put it on your tax return because if you didn't get it or you didn't get all of it, you can get the recovery rebate credit on your 2020 tax return. So you have to put the information in there, but even if you didn't qualify for it for some reason, you don't have to pay it back. It's not taxable and you don't have to pay it back.
And you don't automatically get that recovery rebate credit. It's just new and it's based on how you file in 2020. So if something is on your tax return in 2020 that's different than in 2019, and you may have qualified for that stimulus payment, then that's when the credit comes into play. But if nothing really changed, like claiming status, then it's not going to be too significant. But it's informational purposes, you do need to put it in. And that's why you can go to irs.gov. And if you don't remember how much you got paid, you can easily Google, there's calculators that you can just Google for the first and the second stimulus payment. You just like put in your AGI for the prior year, and then in your filing status, and you can see how much you got if you don't remember.
And then you can take a deduction for charitable contributions even if you don't have proof. But it would matter if you got audited. If you were to get audited, then you would have to show them proof, but you can take the deduction for charities on your return even if you don't have proof. We kind of just believe the taxpayer and take their word for it. So it's definitely possible. And then with Venmo, you would be able to see your transaction history if you use that for charitable contributions. So that would be proof right there. It would show who you paid and how much you paid. So
yeah, so go through all your emails and try to find something that'll show how much you donated to charity, or you could even directly reach out to these organizations because they do have statements of how much you donated to.
And if your employer won't give you your W-2, they're not really supposed to do that, but you can go on irs.gov and create an account, and then you should be able to see any tax documents that were submitted to the IRS. The IRS should have record of it because they are supposed to submit your W-2 to the IRS. And these are some tax help resources: irs.gov/FIDA, irs.gov/freefile. And then you also have our email and LinkedIn if you'd like to contact us with any further questions.
So feel free to, we can just do some questions right now. If you guys want to send them in the chat. I'm sure I'll just do the video.
Yeah, there seems to be a lot of questions in the chat. So, I mean, if you want, you can answer a few of them or just be general, or if you'd like, they can also just send you questions via email that you provided.
I think we've answered most of the ones that are on the chat so far. Were they?
Do you see the other one? There's one on the question and
I
answer.
think
Some
we're
people-
only looking at one. There might be one, yeah, right there.
Yeah, this is. What's an education tax credit? So one of them is the American Opportunity Tax Credit, and it's just if you meet certain requirements, you can take that credit on your tax return.
And that's likely for those, so your post-secondary education. So your first 4 years after you've graduated your undergrad, then it's a lifetime learning credit.
Yeah, and there's years limit. So for the American Opportunity, it'd be 4 years, and then the lifetime learning, I think it's another couple years. So you have to be cautious of that. And then
He just pulled up. Oh, sorry. I'm sorry. Do you see questions on the Q&A or just the chat?
Just
When
to
you-
chat.
well,
Oh, okay.
click on Q&A. That's where I'm seeing all these questions.
Yeah, there's a lot of questions in there. Okay.
Not like, okay, so scroll down. Scroll down.
That's it. As far as it goes, honestly. Yeah, I mean, we clicked on Q&A, and these are all the questions that we answered them, but I don't know if there's other ones.
Okay.
Here,
Perfect.
yeah.
Yeah, then if you answer them live, then I'll go ahead and click on answer live. You've done that, right?
Yeah.
Okay, perfect. Then and then there's some in the chat, I think, but I don't know which ones are still pending.
Yeah. There's one more. It's what about expenses for school that we paid out of pocket without financial aid? How do we report that? That would be the tuition and fees deduction. So we showed you that 1098T. You would report that as a tuition and fees deduction on your return. That's how you would get credit for those expenses that you paid for school.
Yeah, so it's additional to the tuition that you paid. So like any supplies, materials, or books.
But not room and board.
Yeah, just not room and board, but everything else, yeah, you can go ahead and just calculate it up. I think so. Is there another chat? I don't know.
There's some coming in
Can it?
on the regular chat now. Can you claim a laptop?
Is there-
Yeah, that'd be
Okay.
considered school supplies. So you could. That'd be part of the tuition fees deduction.
And then I think one came up right above that one. So if I still live at home with my parents at the moment and have a dependent, will I file single or head of household?
Um,
Well, it depends on if you're paying for all the expenses for that dependent. So if you are, then you would be able to file as head of household. But your parents would not be able to claim you. You'd have to claim yourself. Do you have to report retirement funds? If you get a distribution from a retirement plan, you do have to report that. You should be getting a 1099-R. And this recording will be on the YouTube channel if you guys want to see it later.
Yes.
To report the
Yes. Yeah. I posted that.
Oh, okay. Do you report the loan we took out for 2020 even if it hasn't paid off yet? You don't report a loan that you took out for school. You would just be able to report that the interest that you paid. So you would get a form for that that shows you your interest that was paid on the student loan interest. If I drive for work, my personal car, can I report the mileage? Yes, you can. If it's used for business use, you can report the mileage that.
Well,
Was for business.
if it's just like commuting, like you're just going to, like I just came to work today, no. But if it's, directly for the purpose of your job that you have to use your car, then yeah. So if you're just like driving to work in the morning, that doesn't count towards any business mileage. And if you do need to look at other slides, this recording will be posted.
That's great. That's great. So yeah. So is there any other questions before we end? I know we're ending a little earlier today, but that's okay. I also will send those attending different a survey to get feedback about the content today and the presenters, and also maybe future webinars that you'd like to hear from the money management perspective. I'm also going to send out that link. I'll put it in the chat right now for everyone to look at. Is there anybody, any other questions? I think there is this one that just came in.
If you make less than 12,000, is there a time when you'd want to file still? If you made that less than 12,000 on W-2 and you got taxes withheld, or if you want to claim any education expenses or an education credit, you would still want to file. You kind of just see if it would provide you benefit by putting in the numbers, but it could be beneficial to still file even if you're not required to file. And someone said, what is the YouTube channel name?
Oh, on our Career Development Center website, we actually have all these webinars that we've been hosting for the past year on career as well as money management. And we have them posted on our YouTube channel. If you go to our Career Center website, you'll be able to get, and Damien just posted the YouTube direct link there. You can access this recording, will be up there tomorrow. Or by the end of the week. And then also I just posted right now in the chat for everybody to see the survey link for today's webinar and the presenters and the content presented today. So if you'd like to give us your feedback, that'd be terrific. We'd appreciate that. And any other questions before we go today?
There's a couple more on here.
Okay, go ahead.
Can my parents claim me as a dependent if I don't live with them living in dorms on campus? There is an exception for living away from home for educational purposes. So if you're away for school, your parents can still claim you as a dependent, assuming that they provide half of your support and you're under the age limits. If I stayed in a different state for 3 months and paid $5,000 to Airbnb for their apartment, is there any way to claim that? No, unless there's certain requirements that you need, but just from this information, you can't claim that. And then would I most likely be able to get the credit for the stimulus check that I missed while being claimed as a dependent by my parents in 2019? Yes, if you file a return and claim yourself for 2020, you can still get the stimulus check. That's that recovery rebate credit. So if you didn't get it, you file for yourself, you're under the income limits, you can get those stimulus checks as a rebate credit. Are each of these tax deduction levels exact or estimate? They're exact. There's no wiggle room with the deductions. It's a strict limit.
And if you guys have further questions, just send us an email and we'll be glad to answer.
Okay, great. Well, I'm going to go ahead and turn on my video and say thank you for being here today and presenting the information. This is a lot of content to cover. I know very specific information based on the individual and their circumstance and their family situation, dependents and so on, but it's really good information for everyone to know and to at least be aware of whether they're going to prepare it themselves or have somebody else prepare their taxes for them. So it's good information and content to be aware of. And but we want to thank Grider Moore and Company, the local CPA firm here in the Fresno area, and Shana and Jenna for presenting and giving us content, and past Fresno State alum, you know, from the business school on campus. So we appreciate you coming back and giving back to students on campus. So without further ado, thank you so much, everyone. Have a great afternoon, and thanks for attending today.